My guest today is Danny Chong. Danny is co-chair of the Digital Assets Association Singapore, which is a Singapore non-profit association all about guiding individuals and organizations through the wonderful world of digital assets. Danny is also the co-founder and CEO at Tranchess, which is a leading structured liquid staking protocol. Welcome to the show, Danny.
Thanks, Andy. Very excited to be here, and thanks for having me on the podcast. I have listened to you a couple of times, and definitely one of the more well knowledge and I would say guru in this space.
Kind of you to say, and kind of you to come on the show, Danny. So I reckon we do what we do at the beginning of the show. It would be cool if you could please introduce yourself. I would love to hear some of your personal and professional backstory. What have you been doing in the lead up to becoming, co-chair at the Digital Assets Association?
Sure. An engineer by training, and 17 years in traditional finance. So in trading, sales, and structuring. And at one point, I was looking at business across the Pacific for foreign exchange. And also I was looking at development of new technology and new connectivity APIs to institutions to do structured products. Fast forward, at one point I was very interested, or I was led to be very interested by a couple of friends already in this space, previously also from the financial industries. They were PMs, they were traders, and so on. And we started to talk about this thing called blockchain. At the time, it was very new, and I myself have doubts about what crypto or blockchain can be about. But after a few coffee sessions, not alcoholic, so there's no inducement, we became a bit more certain and sure of what's possible, and we got very excited in it, and that led to the birth of Tranchess. And an on-chain asset tracking and management protocol. Obviously specializing in some form of structured products. And I think that's been in this space since 2021, and fast forward to end of 2023, we see that things were taking place in different speed. Everybody was having different knowledge. Regulators, institutions were doing developments in siloed kind of like a setup. So we say that hey, why don't we set up this digital asset association where we can be the platform, we can be the common channel, network point for people that's on DeFi, traditional finance, exchanges, new and old style exchanges, infrastructure to all come together, share their knowledge, and at the same time, we build towards a common standard. So that was the birth of the Digital Assets Association, and you'll be excited to know that people on the ExCo are ex-regulators, ex-financial people, professionals, and they are now all in Web3 space. So we became credible, right? I mean, most of the time previously, the TradFi didn't have someone that is credible who has done Web3 to speak with them, to connect them to the world of DeFi. The DeFi world does not trust, people who's only from the traditional finance side and with no understanding of what they are doing. So we are that a common point, that bridge to bring the convergence of digital assets together with traditional finance and institutions.
Very nice. Thank you, Danny. So I guess if the purpose then of the DAA is to help individuals and organizations navigate the faster moving world of digital assets, Web3, the on-chain economy, you mentioned that there are some regulators that are a part of the association or ex-regulators. So of course, regulation it's a key part of, I guess, the Asia digital asset scene, right? So from your perspective, why is that regulatory clarity such a critical ingredient for long-term growth? How does it impact both institutional and retail adoption?
I think it's a very important direction to be able to hit forward. Why? Because the same rules that govern financial markets is going to be applicable to the world of digital assets. And if I can explain clearly, like the rules or the regulators in the first place was to safeguard people with no experience, risk management expertise, or who are not so well tuned with products to be dabbling into something that is not suitable for them. So if we actually have that applicable to digital assets, I think it works the same space. And I'm not even talking about retail. We move one step higher. Even for the institutions, right? Digital assets is such a new thing that a lot of institutions and corporations, they are still like wondering what to do with it, how to account it properly, such that the accounting systems, the booking systems, the risk management system can actually have them. And if we look at it in terms of like who can take a bigger risk, it will be definitely the institutions before we go on to the individuals. So the regulators needs to be sure that the risk at this is being undertaken by institutions that has risk management appetite before it is introduced to the retail people. I mean, retail people, we mean like everyone out there, right? So if you don't have someone who knows who are the people or individuals that can take on the risk, they don't have a system to manage that. You cannot actually move down to mainstream. If you don't have also regulators to come in and give a direction of what's doable, what's distributable, that's also is also causing kind of like a cap or a ceiling or the speed in which things can move further. A lot of the institutions will not move ahead if they are not given clarity on what's permissible and not. So I think regulation actually plays a very important perspective from both giving direction as well as risk management of institutions and general population in totality.
Yeah, very much agree. Danny, you've worked in both traditional finance and blockchain. How would you think about merging, traditional finance's strengths in terms of governance and risk management with the transparency and efficiency of, a blockchain economy? So how would you merge those two things?
I look upon it as eventual merge of things is very, very possible. I struggle a bit also with kind of like what blockchain can actually deliver in terms of efficiency and whether all blockchains can be used to be converging with the use of financials in within the financial system. The truth is probably not all. And it's not just a matter of technicalities, but also a matter of like KYC, AML. So I think those are, I mean, you need to know who's in it. You need to know that whether the source of money is actually kind of like clean. Obviously, this again, speaking from the lens of a DeFi, this is obviously not very DeFi. But if you are speaking about like trying to merge with the real world, if you don't have that capability, it's unlikely that you'll be able to merge with the institutions of the world, which is already used to finding out where the source of funds comes from and who are the clients at them. So I think first of all, we need to understand that. Now, the next thing to look at, I would say that blockchain in itself does offer a lot of usages even in what we know as the current financial markets. So one example is previously I went to Point Zero Forum, something that was organized by GFTM, a supported entity by MAS. There basically a lot of the financial institutions were invited to Switzerland to talk about how digital assets, blockchain can be beneficial to the financial market. And we were in this forum that particularly addressed current foreign exchange settlement. So in the current world of foreign exchange settlement, we know that from Monday to Friday, Australia open to New York close. We have the Swiss system to kind of like confirm trades with between institutions. But this confirmation stops at 5 p.m. New York time. And thereafter on weekends, which people continue to use FX, but there are no settlement until Monday. So is there a risk in terms of settlement? Possibly. Is there an inconvenience in terms of like a foreign exchange? Not really, because now there are things like Revolut, there are things like TransferWise, and you can actually just use the banking, and they have some sort of credit system which allows you to transfer money instantly. Right? But imagine a blockchain that facilitates the confirmation of trades over weekend. It's not to replace, but it's to complement. So it will make the whole financial system in terms of settlement risk and all this more possible. I think the amount of risk that is between institutions reduced, and it provides a convenience method way for users, retail users, institution users to be able to get money transferred directly. That's only one way that we can look at it. Like instant transfers, settlement over blockchain. But if we also look at how, for example, a treasury of bonds are distributed now, you have a bond, you are given an ISIN number. When you want to check, you go on the Bloomberg and you search for it and see what are the details. Truth be told, it can be in a digital bond format where the details are carved in the token itself. It can be on blockchain. Whoever held it before, when it was distributed, can all be something that's on chain. And imagine, currently, let's say, regulators would like to know, like who has actually been purchasing or selling this bond. It's all on chain. You just have to have a system or an AI to sieve out whatever information that you need, and the big data is already there. You don't need banks to manually report to you about like what's been done, give you a lot of details, in terms of reporting. You save a lot of manpower, and information is available 24/7. So these are all just two of the very big direction or ways that I feel that the convergence and things can happen in a very big way very shortly.
Yes, indeed. It makes sense, Danny. Look, let's talk real world asset tokenization. There's a common narrative about moving assets, anything really, but maybe let's keep it to bonds and equities on chain. But you've spoken about what you call the two-way flow, right? So how does like a DeFi innovation, like liquid staking, what you guys are doing at Tranchess, how does that help flow back into I guess traditional finance via tokenization?
Yeah, I'm very excited to talk about that. So like we often talked about like bringing real world assets, securities, bonds, even foreign exchange onto blockchain, and we are trying to introduce what's already in the real world onto blockchain. But my often struggle is that is the real world system not doing well, such that we need it on blockchain? What issue does it solve? So these are kind of like the points that always keep me pondering whether when we do that, the tokenization of a real world asset, whether things are kind of like being solved, issues are being solved when we bring it to the blockchain. Some yes, some no. But if we actually look at what's more probably appealing to the general public of the real world is how do you bring something that's already on DeFi on blockchain into the real world and become a real world asset. So I think that's kind of like the dimension and the direction that we are doing. In fact, most of the time, the people in DeFi may already have access to the real world equity, bonds, and whatever, but the real world does not have access to the world of DeFi, and they may not even have the knowledge to do digital assets or crypto. So at Tranchess, what we are trying to do is, for example, we will be taking out BNB. We will be basically through composability with other protocols, enhance the yield of this BNB and working with a real world entity that has licensed and regulated the likes of Singapore to be able to introduce that as a product to the real world. So once that happens, you are a client of a private bank, you are the client of a family office, external asset management program, you are an institution, you will be able to buy that token or note from an institution that distribute this, and you'll be holding on to uh, a version of BNB, but with real yield involved. You can look at it as like a ETF with you, but that will be simplifying things. We don't have central management of that money. That money basically goes into a series of smart contracts, and everything is visible on chain, and the yield will come back to you right at the end without you having to do anything. So you enjoy basically having the upside of holding on to the underlying, but you also have the yield without the need for you to continuously do staking, and it's all automated. So I think that's kind of like the beauty, and I think for most first timer users, actually even for maybe season kind of like a crypto person, they say that actually this helps them because not everything they can actually do it themselves, and sometimes they may not have the ability to keep watching out for so many things out there to kind of manipulate, your smart contracts, your wallet to maintain different wallets for different purposes. So this is what we are trying to have a simplified product that brings the world of DeFi, the best of you, basically into the real world and accessible by accredited investors and institutions.
Yeah, got it. Thank you, Danny. There's an example that I think is often used in Singapore. It's like it's called Project Guardian, right? Often mentioned as like a, I don't know, commercialization catalyst for tokenized markets. Yeah, well, I mean, from your perspective, just for people that aren't aware, what is kind of interesting about projects like Project Guardian, do you think?
So Singapore takes on a very pragmatic approach of like how to learn about digital asset, how to learn about crypto, what's possible with blockchain by providing sandboxes, by like leading projects to work with institutions to understand the risk involved, to basically to take it from not just a project, but turn it from experimental to actually something that is workable and marketable in the future. So first and foremost, I think a lot of people in this space, it's very appreciative of what Project Guardian entails and what it has helped to introduce. Um, if you want to look at it across the other regulators, right? I think most regulators had adopted a more like, okay, let's wait and see. Let's see what other people is doing first, and then after that we will follow up. So Singapore took on a very head-on approach, but risk-weighted kind of approach by working with a small group of institutions to make this happen. And by having all these banks to come on board, to run all this kind of like a different tests, it basically helps de-risk things over time. It helps to sieve out the correct direction for other institutions and maybe eventually for um, the masses to actually follow. So I think it's very exciting to say that currently today, right, it's not a very extremely big scale now that is commercialized from what Project Guardian has achieved. But between institutions, I know there is a good system that's up and running. There are blockchain that is being tested out. There's stable coin that's running through for payment and so on. So I think it's already a good start. Obviously, we are talking about achieving more with programmable finance. We're talking about how to introduce this to greater variety of users across institutions, but it takes time. I would say that to be having pragmatic step steps to move forward is better than just doing okay, let's go, and after that you decide it's not working, and then you come back to zero again. So I actually like the way and appreciate the way that kind of like Project Guardian and overall how Singapore has moved step by step towards a very strategic build out in digital assets.
Yes, indeed. It feels like we've moved past I guess the first one or two phases of DeFi, DeFi summer, and then when everyone was just chasing different ways to achieve high yield. Now you've got a more of a hybrid approach with, kind of DeFi mechanisms and maybe traditional finance safeguards and the idea is, I guess, more sustainable risk adjusted yields. So, how do people in, I guess, the Asia market kind of think about these? What kind of investor groups are the first to use these products, and how do we take it, wider and get like a wider adoption?
First of all, I feel that like we need to qualify kind of like what kind of yield is actually people talking about when they talk about like DeFi yield, right? So previously it was a protocol issuing tokens or governance token utility tokens of their own, and by staking your resource inside that protocol, you hope for that token to get listed, and in return, because you have been incentivized by the utility or governance token, if the protocol does well and it goes on to the exchange, you will be able to realize kind of that yield by selling the governance token on the exchange or anywhere on the DEX, and that's kind of like the yield that's mentioned before. But this type of I used to describe to my friends in the real world like this is like a Kickstarter program with incentivization. May not be always the way forward. I think it has introduced enough amount of attention and also like focus on DeFi. But now users have grown more sophisticated, and from a real world looking in, they are looking for something that's more sustainable long term, something that is printed and given to you is not sustainable. And a lot of the protocols sometimes fizzle out in the long term because they have no more tokens to incentivize users. So what we are looking for, or the transformation that is incoming, is a sustainable yield product, which is something that Tranchess has always been emphasizing. And hence the new product that I mentioned just now, right, about having yield that is generated from the likes of the Binance Launch Pool and so on, will be something that is interesting for the real world as well as DeFi natives in the long run. You can also look at another way that people are trying to generate yield, which is the likes of how Ethena is doing. For example, they have a stablecoin which is basically generated from long spot versus selling of puts to generate a difference. So there's no risk involved, but you have a yield that's generated from the differential between what's on the perps futures versus the spot. So these are kind of like what I will call sustainable yield, like for users that people are actually actively seeking out and are trying to do. Another case, for example, is like Lido or even Tranchess, our product of like doing validator liquid staking, validator staking or liquid staking, depending how you want to look at it. But basically, you get a cut from whatever that's taking place in the blockchain. A part of the gas fees go to the validator for like doing validation of that blockchain, for securitizing the blockchain, and those are also what I call sustainable yield forms. So yeah, I give you a few example, more to say that I think that model of like printing tokens and giving it out will have less attraction moving forward into the future. And I think the focus will be more towards looking at something that's more sustainable.
Yeah, Got it. Thank you, Danny. Let's finish up this part of the podcast then. And it'd be great if you could tell people, for those that want to learn more about what you and the team are doing at the Digital Assets Association in Singapore, what is the best place for people to go to learn more? And also, of course, for Tranchess, where can people go to look at the liquid staking and yields that are available on Tranchess?
Oh yeah, for Tranchess, please go to www.tranchess.com. I think that website one pager definitely will show you a lot of like what's currently available. Obviously, for more information, click on the documentation part. You'll be able to see the white paper if you are a very sophisticated user. If you want to look at like on a one pager basis, we also have that link on top, so it's all there. In terms of the Digital Assets Association, it's also available on www.digitalassetsassociation.org. So we are quite excited to also announce that this is the first year we'll be having a full-fledged conference in September 30th in Singapore. So we call it the Digital Asset Summit, and we are delighted to have invited Hester Pierce, SEC Commissioner of US, known as Crypto Mom. She'll be doing a live virtual session with us. We have invitees extended from DBS, from MAS, from Binance Chain, Crypto.com. I think we have quite a lot of exciting people coming. I mean, not surprising because that is the week of Token 2049, when a lot of people will either be in Singapore for Token 2049 or F1. I hope Andy is going to be around as well. Then definitely we'll want to catch up over a cup of coffee.
Yeah, sounds good. Actually, I'm a Formula One fan, and the Singapore race is always one of the best races of the year, being a night race. But time to finish up the show, Danny, and we'll do that, of course, by running you through the very famous Crypto Conversation hot take round. Are you up for it?
Okay, sure.
Yep, that's the correct answer, Danny. Just say yes. Well, what I'm going to do is I'm going to run some questions at you, and I just want you to give me kind of short, snappy answers, hot take style, if you like. No right or wrong way to do it. Question one for you, Danny, is where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I will be in the middle. I will observe and see, but my direction for BTC is still up.
Yep. I like it. Look, Danny, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. Now, 10 years in blockchain is a long time, but, whatever you like here, Web3, DeFi, Tranchess, the Singapore Asian Web3 scene, what does it all look like in 10 years' time?
It's going to be flourishing well. It's going to be a lot of changes, and projects will fizzle out fast, but there will be unicorns and bigger projects and success stories to come in a faster kind of like a turnaround time. So up is also the other way to look at it.
Yep. All right. William Gibson famously said that the future is already here. It's just not evenly distributed. With that in mind, Danny, what is an example of the future being here right now, but most people aren't aware of it?
We have the blockchain technology on hand, but we are not harnessing it enough. We have AI that also will help to accelerate the extension of blockchain into the real world. We just need to find people to work together to bring this about faster.
Yeah, very well said. And it brings us nicely to our final question, Danny, which is, what is your favorite science fiction book, film, or TV show?
Back to the Future. 1, 2, and 3.
I love it. Michael J. Fox, The DeLorean. Great selection. Thank you, Danny. All right, let's close it out, and close it out by, whatever you want. Shout out your Twitter, shout out those websites again for Tranchess and, Digital Assets Association.
Sure. Again, for Tranchess, it will be www.tranchess.com. For the Digital Asset Association, it will be www.digitalassets.association.org in full spelling. And then, if you are on Twitter, look for me at DC King T. I will be there, 24/7.
Awesome. Thank you so much, Danny. All the best and bye for now.
All right. Thanks, Andy. And thanks, everyone, for staying tuned. Bye.